We're talking about Caplin Laboratories. Vivek Partheeban is joining us. He's the Chief Operating Officer. Now, the reason that there's been a buzz in this stock and for the company is because their subsidiary has cleared the Brazilian health regulators inspection, which unlocks access to a new market. A little about Caplin. It's a manufacturer of APIs, finished formulations with presence in LATAM, Africa, USA, and other nations. And Vivek is joining us today. Very good morning, Vivek. Great to speak with you here in the show. Let's start by understanding what this Brazilian health regulator nod means for you when we say it's unlocking access to a new market. How large is that market? How is Caplin poised to make the most of this opportunity?
Sure, thanks. As you know, Caplin has a large base in Latin America. In fact, close to 82% of our revenues currently come from LATAM. And Brazil is by far and away the largest market in Latin America, right? So ever since we had our strategy to expand into the larger markets of Latin America, such as Mexico, Brazil, etc., we've been targeting this approval. Of course, Brazil is quite complicated. It's not one of the easiest markets to enter into, but getting past ANVISA inspection is one of the first steps and one of the most important steps for us to get access to this market. Most of the products that we're developing in recent times, we're developing them for a global launch. Of course, US being one of the prime targets for us, and an extension of those markets, Brazil is going to be an important piece for us.
What is the size of the potential market, Vivek?
Yeah, in terms of North America and South America, if I'm not wrong, Brazil is probably top 2 or top 3 after the US, right? So the potential is incredibly large. Obviously, what suits to us, what are the areas that we are going to be targeting is important. And for us, injectables and ophthalmics are the first level targets, and oncology piece is the next one that we're going to be aiming at in the coming few years.
Which is what I'm asking. What is the size of that market for you and the potential that you have penciled in when you've got these regulatory approvals for injectables and ophthalmics?
Of course, I can't get into specific numbers because it's a dynamic space, right? So it is the generic
ballpark, just to get a sense of, you know, how big is that potential and how tough is that market to break into?
Yeah, so our business in LATAM is over $200 million, and that is from the smaller markets of Latin America, such as Central America, like Guatemala, El Salvador, Nicaragua, Chile, etc. Now, if you look at Brazil as a whole, it is larger than all of the current markets where we're operating in combined, right? So obviously, it is an incredibly large market, no doubt, but it is also complex because there's a lot of incumbents there. There's a lot of local manufacturing. And there are also some multinational companies that have made their mark in the earlier years as well, right? So it's not going to be, value accretive in the absolute immediate few quarters, but 2 years down the line, we can start to see ourselves creating a presence out of Brazil.
Right, Vivek, you mentioned that about 80–85% of your revenues come from Latin America. I reckon that Brazil is your largest market there. And the first quarter, of course, has seen a bulk of your growth, which is about 16% growth on a year-on-year basis for your revenues. A bulk of that is on account of your, new launches on injectables as well as ophthalmics. One, your view on whether or not, what kind of launch trend can we expect? And secondly, are there newer areas that you're also looking at when it comes to those markets?
Yeah, so we don't have a presence in Brazil at this point. When it comes to Latin America, the unique thing about our company is most of the revenues that you see today are from the smaller markets of Central America and smaller markets of mainland South America, right? So obviously, as we evolve as a company, we want to be getting into the larger markets in LATAM as well, and Brazil and Mexico are going to be important pieces in that. Having said that, on the launch side of it, what are going to be the targets? We are growing in 3 directions, I would say. Number one is our expansion in the US. We are creating our own front end in the US today. In the next 1 to 2 quarters, we will start to see some revenue coming out of our own label being launched in the US. Number 2 is, as we've discussed in the past year, is entry into the larger markets of LATAM. And number 3 is our new oncology business that we are starting. The oral solids facility in oncology has already been completed, and we've already started seeing some traction over there. And in the next 7 to 8 months, the injectable division of our oncology piece will be completed as well, and we can start to see some progress over there. So these are, by and large, the three engines of growth for the company as a whole.
What is the business you expect to come from the oncology division?
So oncology is going to be important for us because typically this is an area that goes specifically in some channels that we've not been part of in the past. And number two, we'd like to think that the platform that we've created in Latin America puts us in a very good position for us to really add to our portfolio over there. It's early days at this point, and typically what you see in oncology is it's much more institutional business compared to what we are used to in the past, which is much more on the private market side of it. So it's a work in progress. I think we can come with some numbers out as and when we see fit.
So LATAM is the big focus, US is the big focus. Just in terms of US pricing, price attrition has been a bit of an issue. Vivek, wanted to know your view there. Are you seeing this issue ease? How is it working for you?
So in generic business, pricing is always going to be a challenge if your business model is also generic, right? So we need to be a bit unique when it comes to our offering to the market. We need to be a little bit unique when it comes to how we position ourselves as an entity in the US, right? So taking a leaf out of our Latin American business, what we want to do is we want to focus a lot more on the marketing and distribution aspect of the US as well. So that's why we are launching our own label over there. I mean, we've made public statements that we are not going to be targeting the top 3, top 5, wholesalers and buyers in the US. We want to be trying to occupy the niche outside of these spaces, which is what we've done in LATAM, and it's worked out very well so far. So pricing will always be a concern, but the business model differentiation is much more important for us as a company, and we're in it for the long term. We're not really looking at what pricing it is today and what it's going to be in the next few quarters, right? We need to be unique rather than work only on a pricing level itself.
All right. Thank you so much, Vivek Partheeban, COO at Caplin Laboratories, talking about what is a fairly big announcement for the company.